Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah. You're watching Indian Open. Let's get straight to the headlines at this hour. Tata Sons chairman N. Chandrasekaran says Tata Steel's focus is back home in India as the country's oldest steelmaker looks to acquire some of the stressed assets put on the block. The International Monetary Fund warns world leaders of complacency even as it raises global growth targets in 2018 to a 7-year high. Booming stock markets and signs of a global recovery are fueling record levels of optimism amongst chief executives, shows a PricewaterhouseCoopers survey. Over-regulation, political instability and cybersecurity top the list of concerns. And Donald Trump signs bill ending the partial lockdown in the federal government. Let's take a look at a brief trade setup for the morning. It looks like we're starting off very close to 11,000 if the SGX Nifty is to be believed will hit those record levels at the start of the trading day. So give or take around those levels is where we will start. And hopefully, with all that's happening around the world as well, we'll have a day in the green and probably past 11,000 as well. In fact, the rest of the Asian markets are already showing signs of that optimism. And if you just look at what's happening to our markets as well, the last couple of days, yesterday, the trading the trading pattern that emerged, getting heavyweights participating, newer set of winners coming in as well. Reliance, which hasn't participated for a really long time, was up about 4.5% yesterday. TCS participated. So bigwigs participated in trade yesterday, and market breadth was much better than what we've seen last week. Remember, last week, while the headline numbers did well, a clutch of mid-cap, small-cap names and the overall market breadth wasn't looking that impressive. Even the Nifty advanced decline wasn't looking that impressive. That was looking much better in trade yesterday, at least the broader end of the spectrum. The mid-caps and the small-caps did well. And just look at the set of stocks, which went up. It just shows that there was all-round participation, real estate, technology, consumption in a big way. With the Jubilant Foodworks, United Breweries and some of the smaller ones had big moves in trade yesterday. So just showed overall participation in trade, which is always good. One key fact to watch out for, one key pointer to watch out for is also this India VIX. Though CBOE VIX too has moved up, but India VIX shot up in trade yesterday. Almost 10% higher. CBOE VIX has gone up about 18% in the last 10 days. So volatility is on the rise. It's not trading at those 12.5 odd India VIX levels. But FI participation continues. In yesterday's session too, about 1,500 crores for month to date. You can argue a day or two of block deals or otherwise, but month to date, about $1 billion put in by FIs. This is NSDL data. Clearly shows where the bent of the foreign investors is. So all looks hunky-dory. What are the stocks to watch as a result of that in today's session? I've picked up 3 there. I'm sure there are lots more, but 2 or 3 stocks which I thought would stand out. Asian Paints, though may not quite obey the market momentum, the revenues lagged due to lower volumes. Expenses have risen as well. So while the bottom line, I thought bottom line was above estimates or better than what a lot of people anticipated, the revenue disappointment was showing. Just Style, optically, maybe the numbers look okay, but I think operational performance was fairly strong. The bottom line was down due to a lower other income, and which is why the bottom line number didn't look all that great. But the operational performance was very strong for Just Style. Do watch out for this one. I thought Piramal Enterprises was interesting too. Motilal Oswal has come out with a note. They buy a target of 3,500. They believe the recent fundraise as well as newer avenues will fuel the further leg of growth. This is a large market cap, about 50,000 crores. They believe there is an upside of about 24-25%. Typically, when the Motilal Oswal notes come out, stocks tend to react a bit. You'll probably see this one reacting a bit. And then a clutch of other results as well, which we'll talk about during the course of the day. But for now, let's tell you what's lined up on First Word. It's a collection of the top editorial stories that we believe stand out in today's session. We'll talk about how emerging markets may have some more steam left. Charts put out by MSCI show that Asian Paints seems to have lost some of the luster in the last quarter, and we'll tell you why. And what do brokerages have to say about Axis Bank's earnings? And wind it up with the big voice N. Chandrasekaran's take on Tata Group's different business verticals, including steel and the financial services division. Now, the emerging market rally continues. US dollars depreciation and the resurgence of global growth were some of the top 3 drivers behind a double-digit rally in global equities last year. Is as per the MSCI, stocks were led by MSCI's emerging market index, 28% return. And as we enter into 2018, will investors have to monitor whether the themes continue to the new year or no? And what kind of allocation should they take between developed markets and emerging markets? That is probably the key question. And I think in a release that they gave out, at least which came to us yesterday, there were some very interesting charts that they put up, and which is what we should essentially be dwelling on, the kind of difference between MSCI EMs and MSCI developed markets. Now that chart is a correlation. The blue line that you see is the correlation of MSCI EM to MSCI World, and why the correlation may have dropped a bit is just showing signs of flattening out and bottoming out. And if the blue bars, which is the world market growth, and the pink bar, which is the MSCI EM market, if those starting moving up and continue to move up in line with global growth, then maybe there is no reason to doubt that this EM rally could well continue, simply because it is not just a factor of EMs, it is also a factor of what the world is doing and the EM growth following the world growth, or vice versa, but essentially both moving in tandem. So that was one very interesting chart that MSCI has put out. They of course talk about how currency is given a big boost to dollar-based investors across the world. It may be different for different countries, but by and large, the overall gains and the currency boost is giving a big boost to dollar-based investors, and therefore all foreign investors should be fairly happy with a large portion of their investments as well. And last but not the least, in one of the other charts, they've given how real earnings growth have driven returns in 2017. Now, you could argue that in India that hasn't happened, but if in 2018 the real earnings growth comes back, and if the IMS forecast is to be believed, with the GDP growth looking very healthy in 2018, it won't happen without the listed entities giving out those returns on the results. Then you probably poised for good growth numbers within India as well. But the fact that they are saying that it's real earnings growth which is driving returns and not just perception is something that is very, very interesting. Last but not the least, this was, I'll just try and make sense of the chart out here. They are talking about how the developed market returns versus emerging market country returns in 2017. And what they are saying is, the one word of caution that I thought they're sounding off is that the risk to reward profile, which arguably should be much better for the developed world as opposed to the emerging market world, because the risks in investing for any foreign investor or any investor in the developed market would perceptibly be lesser. But the risk reward profile of the EMs and the DMs have converged. You look at all the blue dots, and they are the emerging markets, and India, China, South Africa, Korea, all of them top when it comes to the returns. And then on the real earnings growth, of course, a lot of these have gone ahead as well, the likes of Korea, for example. But developed markets are performing on the real earnings growth basis, and yet the profile of risk return is similar right now. To my mind, I think what they're trying to say is that needs to change a bit, but that's probably that only word of caution that I thought was there in this note. Otherwise, they're essentially saying that this emerging market rally is in line with the global market rally, and maybe just there is no need to panic as yet. Okay, so that's as far as the markets go. Let's talk about all the key earnings that came out yesterday. Two Nifty numbers, remember, came out, one during market hours, one post-market hours. Let's tackle the one which came out post-market hours. A lot of you not know about it, but Asian Paints profit rose for the second straight quarter in line with the analyst estimates. Agam Bakleet standing by with the fine print of the numbers. Agam, good morning.
Good morning, Neeraj. Let's start off with the fact that Asian Paints, along with a lot of the other consumption companies, was working on a low base. That said, when it comes to its top line, it's come up with a number of around 10%, 10.5% growth. And this is in terms of net sales. And that number is below Bloomberg consensus expectations. The surprise here, however, is an expansion in your operating margins coming in at around 20.9%, whereas our expectation was around 19.5%. And because of this, we have seen profits grow as much as 19% on a year-on-year basis. Now, everyone was watching out for the impact of crude oil, because we have seen a sequential uptick, that's a given, but we've also seen a year-on-year uptick. And because of that, we have seen raw materials costs move up by as much as 13.6%, and raw material costs taken as a ratio to revenues, that ratio now stands at 50% as against 44% year-on-year. So there has been a substantial uptick, and that is very, very evident in the raw materials costs. I think The reason why we are looking at expansion margins because of their focus on the premium segment, which of course commands higher margins. And other than that, we're also looking at other expenses, which were down as much as 6.5%. So on the whole, a mixed quarter, I would say. Weakness does come in with respect to revenues, and they have suggested double-digit revenues, which means it will be likely around 10-11%, but no more than that. I think what is going to be crucial is how they see demand pick up as we move in, and what crude can do for their input costs.
Agam, just throwing this out of the dark at you, but yesterday when I was speaking to Yash, he mentioned that Kansai and Nerolac too had a mixed bag of numbers, though no disappointments on the volume front, but a mixed bag nevertheless. Seems like paint companies are setting a bit of a trend.
Yes, Neeraj, and in fact, when it comes to Kansai Nerolac, what's really come out, there is the impact of input costs, and that's the reason why their margins took a hit. Surprisingly, we were also expecting a contraction in, your margins for Asian paints, but that has not come to be. So there is a little bit of a contrast there, but we also have to remember that Kansai Nerolac, is focused in industrial paints, and so their margins picture, because of the product mix, will be different from Asian paints, which looks at the premium segment. So to a certain extent, there is that dichotomy. But other than that, when it comes to your volumes, again, all will be determined by how they do in this particular quarter.
Okay, thanks a lot for that. Thanks for putting that into perspective, Agam. I was just looking at the Morgan Stanley note this morning as well, pretty much in line with what Agam was saying, that the volume disappointment stands out, and they of course expect the stock to react negatively to the third quarter numbers. We'll have the reaction from Asian Paints today. They maintain their overweight rating, but they believe the stock will react negatively to these numbers because of the weak domestic volume growth that Asian Paints has put out. Let's wait and watch what happens. Consumption by and large is having a good time, but not necessarily that all consumption should do well. Maybe, just maybe, Asian Paints and the other paint companies don't do well. What about other numbers? Remember, we spoke about Axis Bank yesterday. The numbers came out at about 2 p.m. They missed analyst estimates in the third quarter, but the good news was that asset quality improved. This is something that we spoke about yesterday. Shraddha spoke about it extensively. But what have brokerages made of these numbers? Shraddha has the highlights from the brokerage reports for Axis Bank this quarter. Shraddha, good morning.
Morning, Neeraj. So, broadly and not surprisingly, most of the brokerages have retained their rating on Axis Bank, but many of them have actually hiked their target prices by up to 12 or 13%, and that was mainly on the back of better than expected asset quality numbers. JP Morgan has maintained overweight but raised the target price from 650 to 700. What they're saying is that while they see the next 3-4 quarters as challenging because of the uncertainty over the timing and quantum of backbook provisioning, they believe that at 2 times price to book value ratio, Axis is their top value pick. Morgan Stanley has maintained an overweight and target price of 770, which is pretty bullish by itself. They've said that impaired loans have shown a good trend after a weak second quarter. They're expecting asset quality and core operating profit trends to be volatile over the next 3-4 quarters. But having said that, they believe that the improvement in impaired loans, that trend will continue over the next few quarters as well, and that will drive strong stock performance over the next 12 months. Credit Suisse has maintained a neutral rating but raised the target price from 525 to 595. They've said that they expect credit cost to normalize from 2.7% in FY18 to 1.2% by FY20. And CLSA has a similar view. They've maintained a buy, hiked the target price from 650 to 730, and they've said that they again expect earnings to normalize from FY19 onwards. So broadly, a positive view coming in for Axis Bank, Neeraj.
Shraddha, just a couple of questions. One, CASA for Axis Bank wasn't the strongest. What's the trend been like? Are there any comments that came out from the management about how CASA could be over the course of the next couple of quarters?
Well, Neeraj, but having said that, in this quarter, we may have seen a marginal drop in the CASA ratio, but broadly, the trend has been of an uptick. So 47-48%, their CASA share stands at 47-48%. So that's not what the street is expecting to be a cause of concern. But broadly, in terms of the key takeaways from the press meet, the three important points that they highlighted. One was that the gross NPA ratios will continue to moderate from the current levels, which is good news. They've said that they plan to wind down the entire watch list by March 18. So by the next quarter itself, they will wind the book down. At 2 years back or 8 quarters back, they had given a timeline of about 8 years by the time they would have exhausted or wound down their book, and that's happening. Thirdly, they have said that the story will now shift from bad loan recognition to now recoveries and resolutions in Q4. So again, I think what people will watch out for is strong recoveries, because this quarter also they saw recoveries of as much as 4,000 crores. So that's what the management highlighted, that the story is from here on is going to be.
But the central theme remains impaired loans and the improvement thereof.
Yes.
Okay, great. Shraddha, many thanks for putting all of that into perspective. Let's see if Axis Bank has some further reactions in the session today. But time now to focus on Davos. The otherwise sleepy ski town is the buzz of activity right now, with world leaders across spheres descending there for the World Economic Forum. The inaugural session was hosted by India this time around, with Prime Minister attending the World Leaders Summit. Mendonca Joshi has been busy speaking to some of the most prominent leaders present at the event. So let's start off with the conversation that she had with Tata Sons chairman N. Chandrasekaran and hear out what he had to say about the group's steel business, which is aggressively looking to reclaim its #1 position in India. Here's how the country's oldest steelmaker plans to do so.
Very aggressive capital raise at Tata Steel. $2 billion is what you're looking to do. You've already said that some of that will go towards acquisition of stressed assets. How long do you think it will take for Tata Steel to regain #1 position, which you lost to JSW Steel a few years ago, and which now seems like it could take a decade unless you do some very aggressive bidding in the stressed asset scene?
I think it is not about being #1 or #2. I think Tata Steel has a great future. Once this European issues behind, there will be a significant focus in the domestic market. We have already announced an investment of 25,000 crores for the expansion at Kalinganagar. We are looking at the stressed assets, and let's see what the outcome is going to be. But we have stated our intent that we are committed to the Tata Steel business. We see tremendous opportunities. You shouldn't be surprised if you are doubling our capacity from the current 13 million tons.
In how much time is the question, and will most of that then be inorganic besides the Kalinganagar expansion? Because greenfield at this point in time doesn't seem to be the route that most large steel companies are taking.
So I think, let me not put let you not put words into my mouth, but at the end of the day, our intent is to grow. There is a great opportunity, but it does not mean that we are racing to be this or to be that. I think as long as it makes sense, we will do inorganic.
So what will you be looking for? Mostly pricing? Because I'm just curious. A lot of analysts believe that the move up in the commodity cycle doesn't justify inorganic.
You should leave it when I say that we're interested in the stress assets. We are looking at it. The process is on. It's not fair for me to say anything more.
How would you describe the working relationship? How would you describe the overhang of that court case? And how would you describe how concerned you are about the succession at the Tata Trusts?
I think in terms of how I feel in my seat, I think I feel fully empowered. I think it's a great platform. It's a phenomenal opportunity to make an impact to the Tata Group and as well as to the larger society and all the things that go with it, being at the helm of Tata Group. Obviously, that brings a lot of responsibility because, what you decide can affect so many people and so many things. So you need to consult people, you need to carry the board, and usually how you run as a professional, how you run a large enterprise. So I feel pretty excited. It has been a great year.
No friction.
No friction at all. Okay. And in fact, practically, if I have to answer your question, I would say no interference at all.
Okay.
It's a question of I wanting to reach out to anyone Sometimes you feel that a particular board member has knowledge about a particular area, you call that board member. Sure. If I have to reach out Mr. R&T for a particular area because I feel that his view will be critical, then I'll reach out. So apart from that, I think it's been a fantastic experience.
Well, that's what's happening in Davos. Remember, the International Monetary Fund has projected that the global economy will grow faster than expected this year and the next, as well as US corporate tax cuts provide a short-term boost. In its latest World Economic Outlook report, the IMF upgraded its global growth forecast by 0.2 percentage points to 3.9% for both 2018 and 2019. The upgrade comes as economies across continents recover from the 2008 financial crisis. With regard to individual countries, the IMF has left India's growth estimates unchanged at 7.4% in both 2018 and 2019. China is expected to grow at 6.6% in 2018 and 6.4% in 2019. US growth forecast has been raised by 40 basis points to 2.7%. IMF Managing Director Christine Lagarde, however, was of the opinion that the growth in individual countries should be more inclusive for global growth to remain strong, adding that the medium-term growth rate could be in a spot of bottom.
Global growth has been accelerating since 2016, and all signs point to a continuous strengthening of that growth this year in 2018 and next year in 2019. Growth, in our view, needs to be more inclusive, not only across country, which has occurred over the course of the last few decades, but within countries. And some areas of focus, in our view, require training for workers that are displaced or at risk of being displaced by new technologies and globalization.
Okay, just as a wrap on this whole global talk and what it will mean for the markets, the recent rally in markets and the overall growth recovery has prompted CEOs to turn optimistic, shows a PricewaterhouseCoopers survey conducted amongst 1,300 business leaders. The poll also highlights some of the concerns voiced by them. Here are 5 key takeaways from the survey. Well, that's all we have for you on First Word today, but after this very short break, we'll do full tilt towards the day's trade, where while the markets seem poised to scale new record highs, we discuss value investing with Taher Badshah of Invesco Mutual Fund and his thoughts on what's life is post possible 11,000. Of course, a bit later on in the show, we hear out from the management of Godwari Power Ispat on their business plans. The stock has been on a roll, and some more interactions or some more slices of conversations with the head honcho of the Tata Group and Chandrasekaran. All of that coming up a bit later on in the show. For now, take a break, come back with the day's trade.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, higher returns, inflation beater and no taxes. ETF में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
to really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
Welcome back. You're watching Indian Open. I'm Pradeep Pandya. Good morning. Let's see how the Asian markets are doing. Well, Asian markets are trading strong. PM Modi is in Davos and SGX is close to 11,000.
Yeah, we'll probably start off at 11. How about that, Pradeep? We were just talking about this, right, 2 days ago, that most people anticipated that 11,000 could happen during the year. Who thought in the first 25 days of January?
I think, first of all, we heard it from Navneet. No? In the beginning of this series, she has been telling us that call writers are now positioned at 11,000. Navneet, good morning. What's happening to those call writers? Have they moved further higher up?
No, good morning to both of you, but even I'm surprised. I never expected that actually we would be touching that mark so early. We've not yet touched, but at least the SGX Nifty briefly touched that mark. Those are the futures of Nifty. But what is happening in the markets is the weaker hands are now getting out because there's buying coming on every day. Yesterday, the Nifty January futures, as you can see, there was unwinding, but let me tell you, this is the expiry week. So net, if you look at the open interest on the Nifty side, across all the series, it was up nearly 2%. Let's just pull up Bank Nifty futures also, which have started to perform now. Bank Nifty futures closed above the mark of 27,000, which was a positive sign. They're trading at a discount, but net, if you look at all the series for Bank Nifty, open interest was up almost 5%. However, for January series, there was a dip of almost 3%. So you will see positions being rolled over to the February series now. But the key concern here is, if you could just pull up the India VIX, that surged nearly 10%. And we know that India VIX usually moves in the opposite direction of Nifty, but that's not been the case in the past few sessions. India VIX closed above the mark of 15 and it rose almost 10% in yesterday's session. Let's pull up the Nifty PCR. That's the other concern alongside higher volatility index, because the PCR has been going up. Yesterday in the Nifty PCR, once again, this is a multi-year high, 1.79 as compared to 1.3. For Bank Nifty also, we did see the PCR going up to levels of 1.3. Why is the PCR going up? The option strikes will tell you that clearly, because there is more of put writing and call writers are running for cover. So 10,800 call strikes saw shedding and aggressive writing was seen around the 10,900 mark. What are the institutions doing? Well, let me tell you, the FIs have been buying into the cash. So I guess they've not missed out on this rally of at least last 500 to 600 points. But yesterday, they built up short positions on the index futures. So they're playing safe here. unwinding seen at higher levels for the calls, for the index long positions. If you pull up the options data, they did see unwinding across all call long, put long, as well as call short, but heavy riding. Remember, this is a bullish bet when you ride the put short. So almost 28,000 contracts were added there. In terms of stock futures, with stocks to keep an eye on in today's session, these are the new stocks in F&O band: Dewan Housing, JP Associates, as well as Just Dial. All of them were up significantly yesterday. These are the stocks which are out of the F&O ban: Dish TV, GMR Infra, as well as Gen Irrigation. All of them will remain in the ban period. But do watch out for Jubilant Foodwork. I had highlighted this counter yesterday. It did not enter the F&O ban, but just missed it by 0.5%. 94.5% was the overall open interest as a percentage of market-wide position limit. And yesterday, we did see the spot of the stock surging sharply, 8.5% gains coming up there.
Well, we'll watch out for all of these. Thanks a lot for that, Navneet. Abhijit Phatak, Director at Definet Solutions, joins us right now on the show. Abhijit, so many stocks on which the futures activity has been so brisk. We'll talk about all of that. But first, a call on the markets. What should an average trader do if he's got his futures positions intact on the long side? We are set to touch or nudge 11,000, if not eclipse it today.
Good morning, Neeraj. The support is just moving higher day by day, and right now it is at 10,870, 10,880. So as long as Nifty is above that on the spot, it is still bullish. But today I expect a two-way movement. Typically it happens on the Tuesday before expiry. That is my observation over the years. And on the higher side, people again, like yesterday, should not try to go long intraday. They should wait for a dip towards 10,900, 10,920 to go long. And maybe even take a very small short bet around 11,000 or 11,020. One thing I'm looking at is the 10,900 straddle, which is around 115, 120, the call and put together. If that crosses 140, then it's a major breakout on that straddle also, and then we might have expiry even well above 11,000. That is something which I'm looking at very closely.
Okay, so straddle would be interesting to watch out for, and we'll try and track, or else we'll get an update tomorrow morning. But Abhijit, what is your favorite bet this morning? Any stock that you like?
I still feel Hindalco, because there was some, although it faced selling pressure in the morning from the high of 257, it went and hit the support, and from where again buying started coming in the last 1 hour. So if one can go long near 253 with a stop loss below 250, it can go back towards 257 and maybe even 262, hopefully in this series itself.
Abhijit, what about RIL? That was the key driver yesterday. How do you think option traders are positioned there? Any key levels to watch out for?
Like I said yesterday, Reliance 960, 965 was a major resistance which it broke out yesterday, and after breaking out, even intraday it retested that breakout. So that becomes a very strong support now. So as long as Reliance is above 960, 965, it can go towards 1,000 or maybe even 1,020. So one should go long on dips towards 960, 965 with a stop loss below that.
Abhijit, have you looked at the positions in Jubilant Foodworks, the kind of build-up that we've seen there 2 days in a row?
Jubilant looks a bit tired now. I mean, it has gone up by almost 300 points in the last couple of days. So unless it goes above 2,300, one should be cautious in longs. And to have a slightly wide stop loss, one can have a stop loss at 2,200 or slightly below. But if it doesn't cross 2,300, it might go even below 2,200 maybe today or tomorrow.
Okay, Abhijit, we'll leave it at that. Many thanks for joining us today and giving us that perspective. So that's the word from Abhijit Phatak of Define Edge. Let's take a quick check on the commodity space as well before we move any further on the equity side. And Pradeep, what's the setup looking like for the day?
So if you look at the dollar index, that's the one that we keep watching. It has cooled off a bit, although there is a settlement. President Trump has already signed that bill to open the government, at least for the moment. But because dollar is weak, the obvious gainer is gold as always. Then we have also seen some of the base metals bouncing, but it's going to be an event heavy week, so to say, going forward. Today we have BOJ meeting, and you can see the activity on Nikkei. That's also telling you that market is waiting for some bullish comments from BOJ probably, and then what BOJ actually tells us about the possible unwinding of the quantitative easing. That will be crucial. Suppose yen benefits here on because of a hawkish comment coming in from BOJ, then dollar may dip further. So dollar close to 90 is once again I think a key variable to watch out for. As I mentioned, commodities have gained. Copper rose on LME once again, second day in a row, although output data is positive. Base metals in general are doing well. Oil also extended advances towards $64, and once again inventories are likely to fall when the report comes in. I think one soft commodity to watch out for remains sugar. As we have been talking, it's trading week. It traded weak yesterday as well, and if you look at it, the total decline comes to around 13% year to date, and therefore there could be some impact on the sugar stocks as well, just like what we saw yesterday.
Yeah, you were talking about this yesterday, and we had, in fact, I was looking at the BSE small cap. The top 3 or 4 losers were all sugar names. They have been taking a beating off another level now.
Yeah, so they're simply tracking the global prices. If you look at it, sugar stocks always track global commodity prices, and that's what's happening.
Well, let's talk about all of that and more with Mayuresh Joshi. He's fund manager at Angel Broking, joins us right now on the show. Mayuresh, good morning. Thanks so much for joining in. Well, I could have started off with sugar, but maybe the broader markets or the small caps will come in a bit. Let's start off with the larger boys and the showing that we've seen off late. What did you make of the numbers of Asian Paints, Mayuresh?
So morning, Neeraj. No, to a large element, I think the volumes that they posted was a little bit on the softer side. Again, in terms of what they posted on the bottom line, more or less in line with expectations. But a large element in terms of how these stocks will behave, and specifically market leaders like Asian Paints, is what will happen through the discretionary demand, specifically in Tier 2, Tier 3 cities. What actually comes out of the budget in terms of the Pradhan Mantri Awas Yojana and the respected allocations happening there will have a huge say in terms of affordable housing picking up significantly, and that creating a multiplier effect. And at the same time, I think with 2 successive monsoons, the repainting demand, as we've been speaking to a lot of dealers, has started picking up. The third kicker obviously is some business moving to the organized players over a period of time, and Asian Paints being a market leader obviously benefits. But again, I think a little bit disappointed in terms of the volumes posted. So I think a downtick is something that I might expect, but long-term investors can probably hold on to the stock, because qualitatively the earnings will play out over a longer period of time.
Okay, and what about Just Dial, Mayuresh? I think operationally numbers are strong.
Morning, Pradeep. Yes, I think operationally numbers are strong in terms of what they posted in terms of EBITDA margins, more or less expected, because what they are doing in terms of infrastructure, both services and facilities, I think that optimization efforts is picking up. The employee cost is going down as more digitalization is picking up. But the interesting aspect to observe over the next few quarters will be the spending that actually comes through from Tier 2, Tier 3 cities, because they accounted almost 19-20% in the first half of this fiscal. And as extensive campaigning programs keep on running through for Tier 2, Tier 3, the ticket sizes obviously are small, the realizations come down. So there is no dispute in terms of what they're trying to do in terms of their platform, whatever they had built in terms of costs actually started playing out in terms of both unique visitors coming through the online platform, and as well as the kind of listings that they've got along with the cash-rich balance sheet. But largely, again, I think one really needs to have these facets observed. So a short-term momentum, absolutely yes. Long-term call, I still would wait for figures to probably give a very constructive call on this stock.
Mayuresh, there's some strong moves that we're seeing in IT. Now, we've been talking about this space for a while, last 3-4 months at least. But it's off late that the moves are very rapid, and in a lot of names wherein there is no apparent reason. I mean, you understand Mindtree moving up even 3 days after its numbers, 7-8%, because the quarter was very, very strong. That was not the case with the large cap IT companies at all. What's happening here? Is this piling on in the pocket in expectation of growth rates which may come in FY19, which the managements have not alluded to at all? Or is this going a move into large caps which at least have the valuations in their favor, if not anything else?
So I think it's both aspects, Neeraj, as you rightly pointed out. I think one, in terms of the markets getting overheated, the mid caps and small caps, specifically equate to the valuation on a long-term basis, is way above the mean averages. So I think some part of the money is obviously moving in towards large caps, and IT being typically defensive at this point of time. yes, I think that allocation would happen. Secondly, I think in terms of the valuations itself, I think valuations even on the last 2-3 years are not very cheap. But yes, I think compared to a lot of other sectors, they probably give some amount of comfort. The third aspect again is that a lot of management, specifically in the top tier names, have alluded to the fact that retail has started picking up. I think it's the BFSI space which will start picking up over the next 2 quarters. And it's a typical Q4 phenomena where a lot of these spending patterns are defined by their end clients. So I think Q4, Q1 of the next fiscal is something that will redefine how BFSI as a space is picking up. With a lot of corporate tax cuts that are expected to come through, the spending patterns are going to increase towards this sector because they're going to be the biggest beneficiaries in terms of the entire pass-through effect. So yes, I think selectively we did remain constructive on the large cap names. HCL Tech, Tech Mahindra is something that we had liked at lower levels. TCS, as I mentioned time and again, was a clear hold in our case. But one really needs to wait for declines and probably invest in a staggered way. Mid-caps, again, I think Mindtree and Scient is something that we liked. But the move has been stupendous, Neeraj. So I think wait for declines and probably invest in a staggered manner for long-term invest.
Okay. Speaking of IT, let's get in Rahul Randeria's thoughts as well. He joins us right now on the show. Rahul, a thought on these 2 big movers of trade yesterday, both TCS and Mindtree?
Yeah, good morning, Neeraj. If you look at TCS, after 4 years of long consolidation, we have seen a breakout yesterday and we have seen a blowout rally. So definitely the momentum has started gaining from the lower levels, and yesterday if we look at the yearly candle, last year was almost nearing its lifetime high, and in January month we have seen a very strong candle. So definitely the momentum is building up in the stock, but recently what we have seen that the stock has rallied from the levels of 27.50 till yesterday's high, which was 31.34. We could see some sort of pullback till the lifetime high, which was the earlier breakout point, almost till maybe 2900. That should be used as a buying opportunity because larger degree trend has now become positive, and we could see 3500 coming in TCS in next maybe 12 to 18 or 24 months. So definitely any pullback should be used as a buying opportunity in TCS. If you look at Mindtree, again, this is the third attempt where the stock is trying to go towards or inch towards its lifetime high, which is just near about 800 odd levels. So definitely in the recently what we have seen, we have a runaway gap a couple of days back. So we could see some sort of sideways to time correction in the stock, but that should be used to buy at the lower levels with a stop loss of 660. The risk reward would not match. That is the reason why one has to wait for some pullback. Ideal level to enter would be 720, and stock can test the levels of 803 to 810 in the near future. So definitely any pullback in both the stocks should be used as a buying opportunity.
Okay, stay on, Sharman. So much more to talk about. Let's now get in our research team to talk about all the key newsmakers in the session today, and then a quick sneak peek into what a couple of results could look like in the session today. Nikki, Shraddha and Darshan join in with all of that. Good morning to all of you. Let's start off with the stocks in news.
Sure. So, Adhunik Group firms, that's one counter that the group companies that we're looking at. Financial Express exclusive. This is otherwise ARC and Shrey Infra. Shrey Arm are among the bidders for Adhunik Group companies. Now, remember, 4 group companies are under insolvent proceedings put by NCLTs. 24 firms have expressed interest for these proceedings, and the 4 companies include the likes of Adhunik Metallics, which is a listed entity, Orissa Manganese, Zion Steel, and Adhunik Alloys. Next in the list, we have Max India. Their KKR is set to back the company's promoter and is expected to infuse a capital for around good 2,000 odd crore, which is expected to help the capital growth of the company and also revise the kind of debt matrix at the promoter entities that the company is now looking at. Next in the list, we have IOC. You might just see some stock reaction coming in from that counter because the company's board is expected to meet on Jan 30 to consider the bonus issue. MEB Infra is expected to meet a bunch of funds house like Kotak AMC, Principal PNB and SBI Mutual Fund. So you can expect some reaction coming in from that counter. HSIL, that's a sanitary ware company that we're talking about. It it has commissioned a 162 crore pipe manufacturing plant in Telangana, which has a production capacity of good 30,000 MT. In bulk deals, we are tracking 8K miles, where the promoter has offloaded 2.2% stake in the company, which has been bought by DSP BlackRock, a sum of around 1.4%. The stake of 1.4% stake has been bought in by DSP BlackRock for them.
Thanks a lot for that, Nikki. So those are some stocks in news. What about the results that came out post-market hours?
Yeah, so some of them, first of all, tin plate, strong set of numbers. The top line was up almost 146%, profits up almost 189%, and EBITDA up close to 90%, so strong set there. Just Dial, the revenues were flat. They were up almost 1% on a quarter-on-quarter basis. The margins went up 25%. The EBITDA went up 25%, margins coming in at 19% versus 15.7%. Profits was down 24%, given the fact last time there was an other income of 20 crores compared to 2 crores this time around. Rallis India, even though the top line was up almost 18%, one of the highest that we've seen in so many quarters, profits was down 1% and EBITDA was down 14%. Saskin, on a quarter-on-quarter basis, even though the top line was extremely strong at 56%, profit grew, but the EBITDA was down 11% on a quarter-on-quarter basis. And MPS, a weak set of numbers, revenues down 15%, profit down 2%, EBITDA down 5%, so the margins also weak coming in for MPS, so that probably could react negatively.
Okay, thanks for that, Darshan. And one large name to come out with results today.
Well, yes, so steady earnings and business growth momentum is expected to continue for Indiabulls Housing Finance. It has been posting 25 to 30% sort of a profit and loan growth numbers. In terms of key estimates, this time around, net profit is seen up 23% at 926 crores. AUM growth should continue at about close to 30%, while asset quality is expected to remain stable. In the second quarter, the gross NPA number stood at 0.78%. That was the lowest in 5 years. So that's a key thing to watch out for. Just yesterday when we spoke to Group Finance, they did highlight the uptick as far as the NPAs in affordable housing finance segment are concerned. So that's an area that we would watch, and also the incremental spreads, given that they have a higher share of market borrowings and yields on bonds have risen. So Neeraj, that will be the two key things to watch out for, but good numbers expected.
Well, and the stock has been doing well too the last few days. Thanks a lot, all three of you, for joining and giving us those perspectives. Mayuresh, I'm picking up a small cap metal name which came out with a very good set of numbers, though operationally maybe a tad weak, but tin plate. Do you track this one?
So yes, Neeraj, and again I think good set of numbers, but if you look at quarter-on-quarter comparison, I think there has been some amount of stickiness, specifically on the margin front. Secondly, I think in terms of how the movement of the stock has been over the past one, and I think a stupendous movement that has probably taken place. So large element of the numbers is that the numbers probably in line with what the street was expecting. On the margin front, yes, disappointed a tad bit, but again, valuations probably remaining on the high side for this one.
Okay, so that's the call on tin plate actually coming in. Some other interesting numbers, if you look at, Rallis is kind of disappointed. Did you have a close look, Mayuresh, at this number? What's your call?
No, the top line definitely has been very, very impressive, but what has probably happened with the meta-helix operations probably in, and the margins being a little lesser, I think the gross margins and the EBITDA margins probably far lesser. So what they reported at 9.6, 9.8 compared to what the average run rate is, has been the disappointing aspect. But again, I think in terms of their business model per se, I think a very strong business model, strong balance sheet. So the whole rating continues, but I think the important aspect here would be to how the operational efficiencies would play on the EBITDA margins. So I think the whole rating on Rallis continues from our side.
Okay, let's full tilt towards the technicals. Hadrien Mendonca, Senior Technical Analyst at IIFL, joins us on the show. Rahul Randeria is with us. Chairman, both of you. Let's start off with what could be a possible index strategy. We look strong, Hadrien, for the morning, likely to start off at in and around 11,000. What does one do? What is the target that you are setting for yourself?
Yeah, definitely the strategy has to be buy on declines. Nifty has actually broken out afresh from the 10,900 levels, and if you remember on the Bank Nifty last week when we spoke, I was expecting a 500-600 point upside, which we have overachieved already. Bank Nifty surpassed the 27,000 mark as well. But going forward, I see a comfortable another 500 to 600 points from here on.
Because if you see the internal constituents of the banks, if you leave out the PSU banks, private banks are on a roll. ICICI Bank, HDFC Bank, and Kotak Bank, IndusInd, Yes Bank, all these heavyweights are participating very well. The only cause of concern here is the PSU banks, but I think the current move does not need them because the private banks are doing pretty well, and if you get these PSU banks participate as well, then I think we are heading towards 28,000 on a bank Nifty. As far as the Nifty is concerned, the smaller time frame breakout is indicating 11,100 target. Mind you, 11,000 is a very huge psychological level, and if we break this level pretty easily, I think we are going to have a short squeeze, and that could actually catapult Nifty close to another 250 to 300 points. So 11,300 for a Nifty and 28,000 on a bank Nifty from my end.
Wow, Rahul, you would echo those views? I mean, if we were to scale 11,000 easily and close up above 11,000 today comfortably, does this open up the room for more upsides? And therefore, what would be your Nifty trade today or a Nifty bank trade today?
If you look at the last 2 days of candle, today I am expecting that there could be three white soldiers. So definitely the range of yesterday and day before yesterday's, exactly those particular range could be seen on today's trade. But looking at the overall chart, when we have forecasted 2018's target, where Nifty target is coming around 11,413, the target comes around that in 2014, in 14-15, the Sensex high was 9119. It went down to 6825. Again, we have seen that it has recovered those levels in 2017, where we have seen the breakout. So it was almost a correction of 2296 points. If we add on to that particular 9119 plus 2296 points, it is almost coming to around 11,413. So definitely the Nifty target is in short to medium. We were expecting it to become in next maybe 12 months, but the way indices are rallying, we could see in the very earlier future. But definitely at today's level, if we see a breakout and it opens around, say, with a gap of maybe 30-40 points, we could see some sort of profit booking, or as 11,000 is a psychological mark. But for today, the target is around 11,021. We could see some sort of time correction because we are into expiry week, Thursday, and we have a truncated week.
So you wouldn't buy right now?
No, I would okay, most probably focus toward a stock specific action, because in the last 4 days we have seen a sharp rally from almost 10,680 to 11,000. Almost it is nearing to 11,000. So I would focus towards the stock specific action.
Before we discuss those stocks, I heard something. 3 white soldiers. Yeah. Who are they, and do they fight on behalf of bulls or bears?
So these are the particular the candlestick pattern, where the range of that particular 3 days would be similar of that. Say for example, first day is of 100 points, next day would be of 100 points, and third day would be almost 100 points. Not exactly, but it would be just around. So I'm expecting that. That's on Nifty.
So
yes.
you expect a third white soldier today?
Today.
Another 100 points move?
No, it was not 100 points, but yesterday's point was almost maybe 90 points.
Okay.
That could be possible, but it is just a presumption. But let's see what happens. Okay. Because 11,000 is a psychological work.
Oh, okay. Let's just hope that. But individual stocks, Hadrien, what are your ideas?
Yeah, my first stock is Delta Corp. The stock is actually broken from this 4-day consolidation base. If you see the weekly charts as well, we have seen this very beautiful breakout from a flag pattern. So I think Delta Corp is the stock that one should not miss on to. So one can buy at the current levels and play for a target of 362 and keep a strict stop loss at 357. So my second stock is Siemens. Again, a bullish flag pattern that has occurred on the daily charts after consolidation of almost like 1.5-2 weeks. The relative strength is actually bouncing back from the 60 mark, and I think the momentum will surely carry on from here on for Siemens. One can play for a target of 1355 and keep a stop loss of 1301.
Okay. What about you, Rahul?
Yeah, I have 2 buy calls. First is a buy in Bajaj Auto. Yesterday we have seen a strong candle supported with strong volumes, so we could see a decent rally from the current levels. Traders can buy in the range of 32.74 and on corrections to 32.50. Upside positional target 33.80 with a stop loss of 32.24. My second buy call is in United Breweries. The stock is on the verge of a consolidation breakout. It has taken multiple attempts a couple of days back, but again, it is trying hard to break out those levels. So I feel that in the near future we could see a breakout coming in the stock. So definitely short-term traders can buy in the range of 1155 and on corrections to 1130. Short-term positional target 1250 with a stop loss of 1103.
Okay. Well, it's on all buy list seemingly, and the terminal 2 indicating a buy call on NBCC. Jayesh Khilani is joining us with that pattern that the terminal has thrown up today. Jayesh, good morning.
Morning, Neeraj. That's because the fear and greed, which is the proprietary Bloomberg indicator, that has turned positive for the first time in over 2 months now for NBCC. And also, if you look at the Bloomberg estimated target price, that is anywhere 10 to 12% above current market price. So potential buy signal coming in there for NBCC. Now, first, let's have a look at how the fear and greed actually works. Like I was telling you, it's a proprietary Bloomberg indicator, and it uses the spread of 2 weighted moving averages of the true range as one of the key inputs for calculation. And it oscillates on a zero baseline, so it becomes very simple to interpret. When it's positive, it's green in color, and when it's negative, it's red in color. And that is how you get your buy and sell signals. When it turns from red to green, you go out and buy, and then when it turns from green to red, you go out and sell the stock. That's so that's the chart of 6-month chart of NBCC. Now we've seen a steady decline of the price from October onwards, and you have seen that for better part of that period, the fear and greed indicator has been negative, and after a long time, it has actually turned positive. If we zoom into the chart, you can see that the last bar over there is a green color bar, which indicates that there is a buy signal on NBCC.
Okay, any statistic that support what kind of odds we have here?
Yes, Pradeep. So if you had bought all the indications suggested by fear and greed, net profit would be about 30%.
Thanks, Jayesh, for the update. Well, NBCC, a good stock, correcting in an otherwise bullish market and correcting significantly for a few weeks now. Mayuresh, does that look attractive fundamentally as well?
So any further corrections? Yes, Pradeep. A large element on what transpired a few weeks back with allegations raised against the chairman and so on and so forth did create a sentimental effect. But the order book is extremely strong. And with that, I think the revenue visibility becomes extremely viable for the company. Yes, I think the PMC margins, the core business that they run, probably linger around 5.5%, 6.5%. But it's the leverage effect because the balance sheet is so strong. They've got advances coming in from their clients. And again, I think the net working position is not stressed at all. So I think with good revenue visibility, earnings growth expected to continue for this company over the next 2 to 3 years. So I think this remains one of my favorite picks within the PSU universe.
Okay. Well, I remember a small conversation that we had with the NBCC chairman about a few days back when they won a large order, and his projections for what 2019 will do in terms of growth rates were astronomical. I think he projected a growth rate much higher than the existing 25-30% that they clock in. If I'm not wrong, I may have my numbers off board, but he projected a number much higher than what they will be doing in 2018 or what they did in 2017 for 2019 and 2020. Order inflow, yes, but execution as well. It was very upbeat on what they would do in terms of order execution and thereby revenues for 2019-2020.
Yeah, since government is using it as the nodal company that will execute lots of projects. So I think, it could even be on the higher side depending upon what kind of capabilities do they have, or can they really, develop quickly. So I think this stock had discounted everything, and like Mayuresh mentioned, the correction was triggered by those allegations of bribery and all, and the action against the chairman. So not strictly operational reasons. Non-core, kind of issues, and therefore, if the stock corrects, fundamentals are not affected really by that.
Well, so if you see construction, think NBCC. Next time you check out an Alfa Romeo on the company's virtual showroom in the US, chances are that the back-end animation has been done by a developer based out of Bengaluru. Ismo is an interactive market solutions company which also maintains a large database for auto retailers to tap into, and of course for a price. So the stock has gained more than 50%, if I'm not wrong, over the last 1 year, and has some prominent investors as well. So what's working for the company and what does the future look like? The answer on our weekly feature, Stock Scoop. Darshan, good morning.
Good morning. Today we feature ISMO as far as Stock Scoop is concerned. Basically, first to give you a highlight of what the company does, provides interactive marketing solution, websites and all for basically majority of the revenues comes in from the automotive division, retail e-tailing solution, and has the largest collection of automotive images and animation. So basically this is what it does. In terms of the business breakup, what they do, automotive is the biggest one. Then they also have business websites, they have interactive media solution and enterprise products. So automotive is the biggest one that they have, and in this what they do is, first of all, they do virtual reality, secondly they do computer generated interface, and thirdly they do data analytics, which is the frog data, which is they call, which is they accumulate data from significant amount of sources and they give it to dealers, car dealers across the world, so that they will be able to leverage what the customer preferences and what the thinking is that will help them in terms of their business. Now just take a look at some of the important factors. First of all, it's a debt-free company. So in terms of that, that is there. The market cap sub 100 crores, 93 crores, 93% of their revenues are exports. This is important. It is trading half times a book and has investments worth almost 7 crores in mutual funds. So on a market cap of 93 crores, it's debt-free and has investments of 7 crores trading at half-time book. So these are some of the important parameters that you need to watch out for. Now, one other important factor that you always look is when promoters, they are the biggest insiders of the company, and when they increase their stake, there's something definitely happening. So in December 2015, their share in the company was 26%. They kept on increasing it, and now, right now their market is almost 30.14%. So from 26% in 2 years, they have increased it to 30%. So promoters are certainly bullish on the company.
Okay, so this is part one of this piece, and we'll just present the part two of this piece in moments from now. But the pre-open rates about to kick in. In fact, have just kicked in. So let's just look at the pre-open rates and then continue this discussion further. Are we set to hit 11,000? No, for now the pre-open rates don't seem to be suggesting that. 10,977, but if the SGX Nifty is to be believed, we'll probably nudge those numbers. So let's wait and watch. About 25 odd points or 30 odd points that actually take us. So while the pre-open rates are flattish right now, expect these rates to change a bit. Just a quick check on all of those stocks before we move back to Darshan and talk about ISMO. Bring up Axis Bank. Let's bring up Asian Paints as well. Maybe there's a reaction thereof to those numbers. A weak reaction, I must add, on Asian Paints expected, but no, starting off about 53 odd points higher. So 4.5%, maybe that will change. And the Nifty just about getting ready to touch the 11,000 mark. Remember, this is pre-open, so this will change, but it's well, it's interesting to always see even on the pre-open rates, the Nifty touching 11,000. So 11,002 for the Nifty in the pre-open. Let's wait and watch, wait for these rates to settle down at the end of 8 minutes and then take a call. But won't be surprised really if we manage to do that. And all the large caps reacting, a clutch of mid caps as well, which we will focus on, including the aviation stocks, Pradeep.
Definitely. So Interglobe is doing well from aviation space with volume growth coming in. You also have United Breweries, one of the stocks recommended by our analysts, is actually all set to open higher by 3 to 4%. Then you have Havells India higher by around 4.5–5%. Diwan Housing continues to sustain momentum, and so has BHEL, has also sustained momentum higher by 2%. Pidilite once again is doing well, has been in news yesterday, was one of our Fab 4 stocks, I think. On the negative side, you have Mindtree, which has corrected 2.5–3%. Gruh Finance continues to fall after yesterday's decline of almost 14–15%, is all set to open lower by 2.5%. PC Jewelers, Hexaware, Ipca Labs, these are some more names. Among heavyweights, I see ICICI Bank declining a bit, so there is some pressure at this counter. PNB Housing also now joins Gruh Finance, is also correcting 2.5% in today's trade as well. So these are some of the key stocks.
Okay, let's quickly first continue with ISMO. That's the stock scoop, and watch out for what else. Now, Darshan was just talking about how the promoters have increased their stake from levels that used to be to what they are right now. What else, Darshan, works for this?
Yeah, so basically this was one of the key reasons that caught our eye also, that the promoters themselves are bullish. They've increased their stake from 26% right up to levels of 30%. So this is what they do. Let's pull up the other graphics in terms of the prominent investors. Porinju owns 2.3% stake in the company. LKP Finance owns 1.7%. Not big investors, but yeah, Porinju certainly raises an eyebrow here. A lot of prominent prominent clients, you know, the who's who of the automotive world is a client of ISMO. There are others also like Microsoft, which are not even in the auto space. They actually use their database. So across the board, you know, they have clients. So this is a prominent, this is a list of their prominent clients. As far as the financials are concerned, what they've done is that they've managed to improve their financials also. From FY16, when their top line was 43 crores, they've got it to 54 crores. And in the first half, they've done close to 29 crores. So they should exceed what they did in FY17. So on an annualized basis, probably over 60 crores. The EPS has gone up from 1.35 in FY16 to almost 4. And in the first half, they've already done 3. So they have managed to do that. Margins, however, are coming off significantly. From 15%, they managed to move it to 24%. The first half has been rather weak for them, probably a seasonal quarter. 16% is the EBITDA margin that they've done. But overall, financial seems to be decent. Now, what's working for ISMO? First of all, there is significant amount of growth in the auto industry, global auto industry. So that works for them. The capex, as far as their virtual reality and CGI, is over. So that will get in the cash flows for the company. They're looking at foraying into defense manufacturing in terms of those sites. And there's a significant amount of cost advantage as far as the India operation is concerned, because they're centered here. So labor is cheaper and they cater to the global markets. However, there are some concerns. First of all, it does not pay dividend and the return ratios are extremely low. So we'll need to watch out for the financials to play out even more before the return ratios start to kick in for the company.
Okay, Darshan, many thanks for putting ISMO into perspective. The last 12 months, good returns. Interesting story. Remember, it's not a recommendation by any stretch of imagination, just a compilation of a few key things that could be pertinent in a fundamental stock. Anyways, 9:04 pre-open rates. Just once more before we get in the big brokerage calls for the morning, and let's just get in what the Nifty is doing in the pre-open session. Set to touch 11,000. This is good news from a bull's perspective. The question mark is only whether there is more in store. But this is a big move that we're getting in for the index today. Before we move further and get in opinions from our experts, let's just get in Yatin with a quick check of the top brokerage calls for the morning.
Thanks for that, Neeraj. We have Elara Capital, which has initiated a coverage on L&T Technology Services with a target price of 1170 with an accumulate rating. They say that the new client relationship and the scale up that we can see post the ramp up, that is something that could drive the earnings moving forward. In fact, they say that lower client concentration than domestic peers and also domain expertise and client access would be aiding the overall growth. In fact, they say that the earnings upgrade is something which the market is currently not factoring in, and they expect a bull case target price of close to 1560 on the stock, which is a significant upside from the current level. Also, we have Motilal Oswal, which has come out with a upgrade note on Piramal Enterprise on the earnings front. They have revised the target price, maintaining a buy with a target price of 3,500 rupees a piece. They're expecting that in the second half, the profits could see a growth of nearly 28%, and they're expecting the loan book growth of nearly 35% moving forward for the next 2 or 3 financial years. In fact, they believe that the recent capital raising that they have done will be aiding the overall financial services business. Also, they believe that the traction in the home loan segment and also the scope for non-real estate book as well as a corporate finance segment is something that could drive the earnings moving forward. And more importantly, the investment that the company has done in the Piramal Group has done in Shriram Transport and the listed companies in Shriram Capital, that has started yielding higher returns for the group. So on an overall basis and on the financial services business, Motilal Oswal continues to remain bullish on Piramal Enterprise, especially after the fundraise that they have done and the rights issue which they have announced.
Thanks, Nitin, for the update. Piramal Enterprise, that's an interesting pick coming in. Mayuresh, do you agree with that call? What kind of targets do you see here?
A very strong business model, and what they're probably trying to do in terms of raising of capital is going to help them and support and abet their earnings, specifically in the refinance business. The second element of the respective business segments, I think everything's probably doing well at this point of time. So even if they're getting into or foraying into the non-real estate financing, I think the implied returns that they'll probably get and the yield that they can generate on the capital employed can be better. So I think, yes, I think qualitative stock to own. Anybody who owns it should continue holding on to it.
Mayuresh, the aviation stocks look set for a good day. The December passenger traffic growth fairly robust. Is there an idea here? I mean, would you be betting on any of the three?
So yes, I think numbers were expected to be strong. The testimony is that they have proved that the numbers have been strong. The second and the most important key variable is how the ETF prices move and how the dollar movement has been against the rupee. So again, with crude prices probably remaining elevated, you're probably going to see some amount of elevated input costs because both their earnings and costs are reflected in dollar terms. The third element in terms of what kind of leverage they can actually build on their balance sheet, considering the kind of debt that they've got. And though few managements have indicated like Jet to get that debt down, I think the available seat kilometers and the CASK, which is the cost per available seat kilometer, ex-fuel, I think those are the two important parameters to watch out for. And with these respects and parameters, my own sense is that Indigo is something that I'll still continue to prefer on declines. Also on the premise that with the delivery of A320 Neos coming through and expected over the next few quarters, the fuel efficiency would be far better. So even the CASK with fuel should probably show signs of improvement.
By the way, the pre-open rates have settled, 908, pull up the Nifty, and it looks like we will start above 11,000. This is great news. 10,997, so we are almost there on the 11,000 mark. In all probability, start off thereof. The broader markets too may participate. I was just looking at what's done well in the pre-open session. OMCs, IOC, BPCL, HPCL, all three are trading in the green. IOC a big 3.5% uptick. Yes Bank might start off well. No big heavyweights, Pradeep, as of now participating in a big way, but that may well change if indeed some levels get taken out and there's buying on the index per se coming in.
Yeah, that would be interesting. And there is a lot of activity, outside the index. Also, there are several stocks like Godwari Power, which is up 11%. We missed that during pre-open, but now this stock has gained on the back of that order they've received, 850 crore or so. So there is likely to be positive market breadth. Nifty Bank will also support, as it looks like, it's all set to open higher by 50 points. So we are all set for 11,000. But what happens beyond that? I think that would be a big question. Can you really buy at 11,000?
Yeah, well, the global markets are supportive, so that's good news. But irrespective of what happens to the index, and we'll talk about that, but since we are minutes away from the market open, let's tell you all that you need to know to stay ahead in trade today. Indiabulls Housing Finance, Canfin Homes, Crompton Greaves Consumer Electricals, Edelweiss and United Spirits will report their results today.
Malaysian Paints reported a mixed set of earnings as single-digit volume growth acts as a dampener.
Tinplate, Just Style reports strong numbers, while Rallis, Sustain and MPS disappoint with numbers.
DSP BlackRock Mutual Fund checks into 8K miles, while Reliance Mutual Fund buys into Indoco Remedies.
Brokerages raise Axis Bank's target across the board. Motilal Oswal sees a target of 35,000 rupees on Piramal, while Elara initiates on L&T in tech with a price target of 1170.
PC Jewelers, MEP Infra, Wisman Forex and Z-Learn are set to meet investors today. So these would be some of the stocks to watch out for.
Yeah, but all eyes set on what the index could do. Now, repeat question, a lot of people tuning in right now. Hadrien Mendonca, if we start at about 11,000, let's say we sustain that for the first time in 5-10 minutes odd, what should an average trader do? What should an average Nifty trader do?
Yeah, definitely, if we sustain above 11,000, then, you should go long without a doubt. But it is advisable that if you're not comfortable trading the index at 11,000, at least don't get caught on the wrong side. I mean, you shouldn't go ahead and short sell. One can stay on the sidelines, but, don't get caught on the wrong side is what I'd like to say. Because if we close above 11,000, the short squeeze is going to be very fast and we could see index moving higher very fast. So definitely longs, stay longs, or even you can go long at these levels and play for another 100 points on the upside.
Okay, another 100 points on the upside. And in fact, Rahul was also talking about a strong up move today, something in line with what happened over the last two sessions. So this is going to be really interesting. But if you have to pick up one or two heavyweights, Rahul, which one do you think can really drive the index up by, say, 50 to 100 points that we're talking about?
Yeah, if you talk about Reliance will be the first stock, because after a long consolidation, maybe last 3 to 4 months, it was not able to cross 960, and yesterday we have seen a decisive breakout. So that would be the stock, and pullbacks one could buy. Short-term positional target would be 1,000, then 1,050. Another stock, ITC, which is also slowly and gradually picking up the momentum. So definitely that could also pull the index on the upside. And there are a couple of more stocks where IT was yesterday we have seen some sort of momentum pickup. Today we could see some sort of follow-up buying. So definitely this could pull up the index on the upside, but we have to watch out for the 11,000 marks, and then we could see a breakout above those levels. And because as we have seen that Asian markets are almost by 1%. So definitely if that triggers 11,000 psychological mark, we could see another rally of 50 points in the till end of the day.
Let's wait and watch what happens there. GNFC starting off 4% higher. Goodrich Properties another 3% higher as well. There's a big move yesterday, Hadrien, in the property names. Soba or Godrej, any picks here?
Yeah, definitely it has to be Goodrich Properties. You know, the move that has come yesterday has come after a consolidation of like 6 to 7 trading sessions where the stock has seen a little bit of sideways move. So I think Goodrich Properties is one stock that, you know, a trader can buy even at these levels. Your target is coming close to almost 900 levels in the short term, in a day or two. Stop loss has to be very tight because the move is very fast. So stop loss has to be close to 870 or 75 odd levels.
Rahul, one stock idea?
Yeah, I have a buy call in Mahindra & Mahindra Finance. Yesterday's stock has broken last 2 days of range, which was on the corrective mode. So we could see an upside rally from the current levels. Definitely on intraday basis, stock can test the levels of 505. So one can trade at current levels with a stop loss of 479 on the downside for a target of 505 for intraday basis.
And Hadrien, your top call for the morning?
Yeah, I'll go with the Vakrangi. You know, the stock has actually given a very strong breakout after consolidation towards the top. So I think we have a healthy upside, almost 4 to 5% from here. So I think we could see stock rallying towards 490, 495 in the near term.
Okay. Watch out for this one as well. It's slowly and steadily crept up to market capitalization levels, which are higher than some of the known big wigs. We'll talk about Vakrangi though individually in a bit. For now, full tilt towards the market. Stay on, gentlemen, so much more to talk about, but we are all set to nudge Mount 11,000 in the session today. 10,997. My newsroom tells me we've hit that. I'm still waiting for the tick to come out here. All right, now we are there. 11,002 for the Nifty. So it's a big move. 35,911 for the Sensex and the Nifty Bank at 27,000. But it's 11,000 for the Nifty. That's the headline that is coming out from the Indian markets this Tuesday morning at 9:15 a.m. 11,007 now, higher than those 11,000 levels, comfortably at that. And I would guess the broader markets too have shown some strength. Mind you, the Nifty Bank is not participating with the same gusto. Broader markets still doing okay, though the headline numbers are more important, which is the Nifty 50, 11,009. Let's bring up the heat map and show you what's contributing to this. Reliance, the big boy, is right up there, 1.5% higher, I would presume, is the top contributor. IT is not far behind, at least Infosys is not far behind. So that's about 0.75%, and IOC has some gains here. But just look at the screen. It's a sea of green out here. It's not a narrow rally which is leading the index to 11,008, though these are big moves. It's just about a 0.5% move, but it's 11,000 and therefore important, and Reliance is participating in a big way. The last 2 sessions, Reliance Industries has shown its mettle. Also, an absence of losers, but for Asian Paints, I don't think we have too many losers. HDFC Bank may be a bit quiet. TCS, yesterday's big boy, is a bit quiet, but no alarm bells, quite frankly. Save for Z and Asian Paints, no losers, and Reliance in full force. IOC contributing as well. It's good going for the index. Just 2 or 3 very quick names before I hand it over to Pradeep, though I keep in mind while we're talking about these individual names like aviation and a few others, and they'll come up on your screen in just moments from now, because I think the aviation stocks have done well. So those stocks might be doing okay. Piramal Enterprises might be doing okay because of the Motilal Oswal report. So all of those stocks are in focus, yes, but it's essentially about the index at 11,000. Aviation stocks starting off higher, Piramal starting off marginally higher. But Pradeep, all about the Nifty, 11,010 now.
Yeah, but if you look at mid-cap space, Kalpataru Power is up 9%, as you mentioned, on the back of that 850 crore rupees order. GNFC you marked. Also, there is Tin Plate Company on the back of strong numbers, higher by 3.5%. GVK Power is back in green, up 3% in today's trade. HSIL opens a new facility, and that stock has also gained. Jan Irrigation moves out of FNO ban, and stock is higher by 2.5%. Godrej Properties, another stock that we discussed, is up by around 2.5%. And Symphony, GMR Infra would be a few more names that are doing well in today's trade. if we move down further in terms of market cap, among small cap names, you have Godawari Power, which is up by around 5%. I think it's locked at the circuit. Merck Electronics is up by around 5%. Om Metal Infra, so metal stocks are doing well, smaller alloy names. Also, you have Rane Brakes, Alembic. We spotted this stock yesterday. It moved up significantly in last hour of trade. That stock has also gained. I think there's some corporate development expected here. You also have Monte Carlo Fashion moving up in today's trade. So good participation by a large number of small cap stocks in today's trade so far.
11,012 on the Nifty, so it's a strong start and it's staying strong, which is actually a really good thing. OMCs have started off well. Rahul, Randeria, before we thank you, a quick word on Indian Oil Corporation.
Yeah, Indian Oil has been under pressure for a very long period of time. Last couple of days, we have seen that the sell-off was exhausted and stock was moving sideways. So we could see a technical pullback from the current levels. Short-term traders can buy at current levels with a stop loss of 372 on the downside, and upside we could see stock testing the level of 402 in the short to medium term. So definitely any intraday basis one can buy. Anyone on pullbacks one can buy for positional basis.
Hadrien, 11,014 now, very comfortably above the 11,000 mark. This is not to say it will last, but what would you do here on the index or any of the index components?
Yeah, it's too early, Neeraj. We've just started off the day, and we could see bouts of profit booking as well around these levels. So it's better we wait for some kind of confirmation towards the end whether we are sustaining above the 11,000 or not. But definitely, Reliance Industries is one stock that is looking very, very strong, and I think the breakout that has happened here, it could take Reliance, higher by another 100 or 120 points from here on. That's the, the nature of the breakout that has happened. So as far as an index stock is concerned, Reliance Industries, one should not miss out on, can play for another 100 points from here on Reliance Industries.
Okay.
I told you guys, right, 9:30.
Don't Rahul, right now. Really,
Taher, Badshah,
take a leave from both of you. My last question is, suppose somebody has timed it finely and has got a long position in Nifty or Bank Nifty today. He should put a stop loss, I think, and hold on to the position. If that is the strategy, where do you put that stop loss?
Ideally, the trailing stop loss would be above just yesterday's high, Nifty spot as well as Bank Nifty spot. Okay. For all the long positions, because already we have seen a gap up, and already it is maybe 40-50 points above the yesterday's close. So yesterday's high would be below just yesterday's high. One should place just below yesterday's high stop loss on Nifty spot for the target of maybe 11,050 on the upside for intraday basis.
Thanks, Rahul and Hadrien. Mayuresh, what would you advise your investors to do today?
So hang on, Pradeep, and a large element in terms of how the corporate earnings are panning out seems to be very encouraging in terms of the first signs put up, and as corporate earnings will start picking up more meaningfully over the next few quarters, I think the kind of premium valuations that the index or the markets is deriving can very well get justified. On the second element, I think, as I maintained earlier, a lot of the mid and small cap stocks, the valuations are out of whack. So I think you probably need to just trim your positions out there, probably just enter a few large cap stocks. Something like a Reliance, something like an ICICI Bank on declines, where the earnings story should continue, can drive their prices even higher. Clear disclaimer, I think we own both the stocks.
Okay, thanks a lot for that. Mayuresh, good having you as always. Taher Badshah, CIO Equities at Invesco Mutual Fund, joins us right now on the show. Taher, good morning and thanks so much for joining in. Well, 11,000 sooner than what most people would have anticipated.
Morning, pleasure.
What are thoughts now? I mean, what's the sense? Does this rally continue? Does it have legs to continue?
Well, I'm not too sure if, given the level of the markets, anybody needs advice from lesser mortals like us. Yeah, I mean, having said that, clearly markets are responding to the eventual recovery and a much awaited expectation of earnings recovery, which has been kind of expected for the last 2 years and now kind of coming about, and that's one source of excitement besides some of the other factors, like of course liquidity resumption now even from the FIIs, because they have started to kind of become positive now for the last 1 month. So I think fundamentally, as well as to some bit from a funds flow standpoint, the markets are doing what they're doing. But broadly, I think this is a level of the market where one can't, lose sight of risk. And risk control increasingly now from here on will become an important consideration, not just in terms of incremental deployment of capital, but even in terms of what product you select. So ours is not an intention to say that one should stay away from the markets, but basically I think one has to be relatively more particular about the kind of product that you use. So I think some bit of risk control measures in terms of being much more valuation cognizant, probably looking at certain companies and or maybe funds which are positioned on a value style, or those which are probably a little more value conscious would make better sense for investors. So that's probably the message that we can probably convey at this stage. Hard to say as to how much more the market might head. We are in the midst of the result season. We are also confronted with one in a reasonably important event, if at all, the budget. So I think we need to see as to what comes out of all those things. But broadly, I think that is our key message, that we need to now increasingly not lose sight of risk and risk control.
Okay, but Taher, in this kind of market, isn't it very difficult, if not impossible, to spot anything which is really, decently valued and therefore can be bought?
Not really. I think there are certain opportunities. In fact, we have been doing that in our our value strategy, which we call the contra fund. Exactly that. We do find opportunities which are still not as expensive as what the market is. That fund on an overall basis still trades at a valuation which is at a discount to the market. That's helped simply because of the fact that we have gone into stocks which are still not as like, for example, even a Reliance for that matter. I mean, it's maybe doing whatever it is doing simply because there is valuation upside, and maybe it's with a few other names as well in the market, which in sectors which have not really done as well, or some parts of certain sectors which have not done well, and they, in fact, what is probably happening over the last few days is that kind of rotation, that we are seeing some of the large caps and maybe even some of the other mid caps which have not participated in the rally now starting to participate, either because they're fundamentally improving or probably they're just at discounts to market valuation. So I know it's challenging, it's not that easy, but I don't think it is completely impossible for us to find, for one to find ideas which are slightly more reasonably priced in context with their fundamentals.
Wow. Okay. Taher, now, the last few days, or at least calendar year 18, domestic mutual funds have taken a relative backseat to what they were doing in probably the last 6 months of calendar year 17. Is this application of the risk profiling quotient that you spoke about? And the second part of my question would be, if the money keeps on coming at the same pace as it was in 2017, I'm presuming the first 15-20 days would have shown that, where is it that you as a CIO are finding favor? Are you looking at the expensive large caps, inexpensive large caps, or are you settling for the non-index names wherein the growth story might probably be a bit more pronounced?
Well, I think not just in the recent months, but for a fairly long period of time now, we've kind of been finding favor and bias towards the large cap space, and incrementally we have been finding more opportunities. Even from our analyst desks, more ideas have been emanating from the large cap space. I'm not saying that we are completely out of mid caps, but incrementally we find that to be a relatively better place, even from a valuation standpoint. And not just only because of valuations, we've also seen some reason for some of these fundamentals to improve. Like, for example, we saw it in case of private sector banks, certain NBFCs which are relatively better placed from the standpoint of a possible increasing rate cycle. Probably also sectors like technology, we were probably amongst the first ones to go overweight the tech sector in one of our value strategies almost a year back, and when a significant part of the market was negatively biased. And we are now, like as I mentioned, an example of sectors, and this is one such sector which has actually probably been trading at discounts, now once again suddenly finding favor. So some bit of that rotation has started to happen, and we think incrementally we are a little more biased towards large caps. That's giving us a source of comfort from that valuations and risk control parameter that I mentioned. I think even certain strategies which are, let's say, a little more hybrid or probably where there is an asset allocation possibility, cash versus equities, that kind of proposition, dynamic funds. Those are categories which probably from investors who are completely afresh to the market or are afraid or anxious about current levels and valuations of the market should probably look at. So these are things in which you can participate in the rally, participate in the equity upside, as well as ensure that you manage your risk relatively better than otherwise.
Taher, while you said that it's difficult to take a call on the index, but several analysts believe that a level of around 6,000, in 10 years back or so, compared to the 11,000 today, is probably less risky because your GDP has probably, gone up disproportionately higher. Market is actually lagging that. Maybe you should look at book value and not PE because earnings have been depressed. By that angle, do you also believe that we are nowhere close to the highs of the current cycle and we should not therefore worry too much about it? In worst case, probably if you are invested today in a good stock, you will have to probably wait for 12 months if market's correct for whatever reasons, but then you get back your returns.
Yes, we've broadly been believers in the same kind of trajectory that you charted out. That we are still probably at the first year of the likely earnings recovery, and maybe it might extend itself. We don't really know whether it is going to be a structural earnings cycle, but at least we can look forward to a cyclical recovery of earnings, and that might probably last for more than a year and extend into 2020 as well. So we've been holding this view for quite a while, but what has been happening is that while we are getting these early signals of earnings recovery ultimately materializing, we are also seeing some of the risks which were probably not yet expected to unfold so early into the earnings cycle starting to kind of unfold as well. From the point of view of, especially from an India perspective, such as oil prices, such as general commodity price trends, such as possibilities of slightly higher inflation and interest rates. So I think it just makes us a little more cognizant about the risks also which are lurking around. They may not have yet fully manifested, and they may not be still immediately at levels where they've become complete headaches for us and big problems, but we have to be cognizant of those, and they are not something which are at one level within our control. So I think it therefore makes much more sense, and especially when it continues to happen with slightly increasing bias on market valuations, then we obviously need to be on guard. I mean, ultimately these are fiduciary responsibilities, so we just can't shy away all the risks and think of only the positives.
Well, galloping ahead now, are we 11,025 and 36,011 for the Sensex as well? The Nifty Bank 2 participating in a good fashion, 0.5% higher for the Nifty Bank 2 in trade today. Hindalco is up 2.5%, Indian Oil is about 2%, and Axis Bank is moving up as well in the session today. Taher, what about private banks now? The corporate-facing banks have just started to show some decent numbers. At least the one or two that have come out till now have actually done reasonably okay. What within the financials, which is the heaviest weightage on the index, does well over the course of the next 6 to 12 odd months?
So I think we kind of share a similar view, and private banks plus even some of the corporate banks are something which are which can be looked at, especially. So our focus as far as private banks, of course, the ones which have not been on the corporate banking side, are in any case starting to become attractive once again on a valuation basis as well. So this is one more pocket of valuation linked opportunity in the market. They've been kind of silent as well over the last 2-3 months. So many of the frontline private sector banks, non-corporate private sector banks, but some of those which have got a slightly more heavier corporate profile are also, in our view, interesting opportunities. We are kind of positioning ourselves for those, but there we are only cognizant about one thing, that the core franchise has to have been should have been intact. We are looking at those banks which over the last 2-3 years, despite the NPA related issues, have been able to manage and control and hold on to their core lending franchise reasonably well. If that being the case, then we believe that they probably will be bigger beneficiaries. They are also at valuations which are probably at their cyclical lows. So these are candidates for primed for earnings recovery, as well as possible re-rating. So I think we are positioning them, positioning into those opportunities, but very, very selectively. I mean, we are just confining ourselves to one or two of them, and that's how we think about those at this stage. So clearly there is an opportunity out those. So like as I mentioned, this is exactly what it is, that there are a good number of pockets still which are not necessarily, let's say, so-called price to perfection.
Okay. Taher, the other point is, what does an average fund manager do? I mean, I don't envy your job right now. Since the start of the year, or maybe the last days of December, we've been hearing about valuations being stretched, and then we've had a 5-6% or maybe higher than that rally already. So for all those people who are sitting on those 10, 15, 20% of cash, and believe me, there are a bunch of people who've come in and spoken about that on the portfolio management side, about been sitting on cash, waiting for a correction to come in, which is not coming in. What happens now there? I mean, do you get forced to come in and participate in order to shore up the performance?
Well, we've approached it entirely as the basis of mandate. So, for example, in some of the mandates, we don't really hold on to any cash, and we are not supposed to be sitting on any cash, irrespective of where the markets are. We are at best cognizant about what exposures that we are taking, and in terms of individual positions and weightages within the portfolio and the overall construction of the portfolio. But then there are, on the other hand, mandates which are actually more value driven, and there we are cognizant about valuation. So we'll try to dig deeper in terms of those stocks which offer us that necessary intrinsic value or the deep value that we probably desire. And in some other strategies, it is about the cash versus equity allocation and the asset allocation play that we have. So there we are we have that flexibility to hold on to cash. And so from an investor standpoint, we only keep recommending to them that look, decide in terms of what is your preference and what are your considerations. We are only there to advise that at the current level of the market, these are the products which probably make more sense over the others, and that's how. So we have all our products. They are all our babies. So we don't really. I mean, we love all of them, but we still are cognizant about the fact that what risks investors would be running, and for them, what could be the better products at this stage of the market, and that's how we've been kind of advising them. So those who are in a position not to take, who are not in a position to actually take asset allocation calls, should leave it to the fund managers or to those products which would probably take that asset allocation call for itself. So that's how they can manage their cash, not necessarily worry about having that 15%. Go to the products or mutual funds or whatever which will dynamically asset allocate as and when it deems right and deems fit. So that's probably my advice to people who are still being holding on to cash and probably waiting for a market correction.
Okay. So I think commodities are on fire. Nifty is at 1130, and I just saw Tata Steel going up, and also Hindalco.
And Vedanta.
Yes. Vedanta also. So all these stocks are moving up. Taher, what does it mean for equity markets really? Isn't it, one sign of worry? Because if commodity prices remain strong the way they are, today or tomorrow, inflation will start inching up, and therefore all the central bankers who have been printing money will have to probably, resort to tightening faster than what we are anticipating right now.
Yes, so that's one of the risks that I mentioned, that this is something which is still quietly kind of coming up as a risk. It's still not full blown, and it is still something which is manageable. But if it continues this way, then it will kind of show up in various forms. It will probably hit some corporates as well in terms of their operating margins and so on. So that typical cycle will start. The way we can only position ourselves is to try and see which are the businesses which have got pricing power in those scenarios, will be in a position to kind of overcome that and yet not get dented in terms of either market share losses or absolute volume declines or slowdowns. And the second being that you might be able to probably position yourselves in some of these commodity plays who are beneficiaries and derive some benefit out of that through your stock positions in sectors which are commodity linked. So that's the balance that we can strike and try and defend ourselves. So this is how we shuffle around, and we try and see whether keeping our mandates in mind, keeping our overall quality requirements in mind, where do we where do we see the best opportunities to kind of save ourselves against that commodity price hike and as well start benefiting of it in some manner.
Fair call, Taher. We'll leave it at that. Thanks so much for taking the time out and joining us. Have a great week ahead. That's the view from Taher Badshah. By the way, the commodity stocks, as Pradeep said, are leading the way. JSPL2 is up about 5% in trade. At the broader end of the spectrum, aside of Vakrangi Software, which is up another 4%, look at the aviation names. They are flying high, Pradeep. Jet Airways up 4%. Interglobe up 3.5%. I'm not spotting SpiceJet, but I'm guessing SpiceJet 2 should be doing well. So the December passenger growth numbers working well for the aviation companies too.
Yeah, and by the way, Sensex has also hit 36,000. Probably we were focusing more on Nifty because it crossed 11,000. But look at it, both the indices moving up, now facing some pressure maybe at higher levels. But Nifty Bank is picking up, so that's a positive. Above 27,000 now. 28,000 kind of targets our experts have been talking about. Let's see what happens there. Chakri Lokpriya, Managing Director, TCG Asset Management, is joining us on the phone now. Chakri, good morning and congratulations. Your NAV, your returns would also be moving higher with Sensex and Nifty. But what do you do now?
Good morning and thank you. Yes, indeed. And I think what we do now is we buy more. And because Nifty is coming off a year where some of the major names, like you take ICICI, Axis Bank, Kotak, HDFC Bank, their results this quarter have been far better than last year. IT has bottomed out. Pharmaceuticals as a sector has bottomed out. And metals will report the strongest earnings going into this quarter. So, and these, mind you, are the main constituents of Nifty. And so against this backdrop, I think we go much higher from here at the Nifty levels, and even one higher on individual banking levels.
Wow, Chakri, you're saying that these are not stretch levels. You would expect, what, another 2, 3, 5%? I mean, is there a base case scenario that you've built in?
I think from a banking perspective, stocks like ICICI and Axis Bank, the upside is well north of good 25-30% plus. And in the case of IT as a sector, easily about another 10% or so. Pharmaceutical is more stock specific. Metals, can give or take or lose 5% in each day. So if you add that all up, an overall index level can easily go up plus 10% from here.
It could go to 12,000 as well, another 10% here on, Chakri. But I would have taken it from a momentum trader. But as a fundamental analyst and a fund manager who looks at the valuations, are you able to really justify these levels?
See, we can justify them on a stock level, and that's why it adds up at an aggregate level. If you take banking, corporate banking, ICICI, Axis, SBI, all important components of the Nifty have kind of earnings-wise are showing signs of improvement, bottoming out of NPAs. IT's last year problems are well known and kind of bottomed out now. Metals continue their earnings recovery because of very strong export demand and export markets. And Reliance and other oil, Reliance is benefiting from a global economic uptick. So from this perspective, all these companies that I mentioned are all fundamentally strong and important constituents of the Nifty.
Chakri, I just want to end this conversation with something that's happening on the side markets, not necessarily the index, but consumption as a theme seems to be flying very, very high. It was the brewery stocks or alcohol stocks yesterday. Aviation, I'm classifying it as a pseudo consumption, is up because of the December passenger growth. What within this basket do you like the best?
Within the consumption, I think going into the next few months, the durables as a sector will start picking up. And mind you, if you look at hotels as a sector, they have shown the best occupancies in the last at least 6 or 7 years. And so that correlates well with a growth in airline traffic. And so, and mind you, going into the summer months, then you will see an additional, all this is business demand, what we just saw. Going into the summer months, you'll also see some amount of consumer demand as well. And so I think consumer does well, consumer durables do better in this space.
Wow. Okay. Chakri Lokpriya, we'll leave it at that. Many thanks for joining us today and giving us this quick perspective. Well, divergent views there, but that's all. Yeah, that's what makes up the market. Chakri believes that there is substantial more upside at the stock level and thereby on the index level going ahead as well. He said buy more at these levels.
So he's saying 12,000 is possible. You know, you're talking about what was the scenario 10 years back. So our GDP in dollar terms has probably doubled over last 10 years almost, and therefore 6,000 of Nifty can become 12,000 of Nifty. But then that was the peak last time around.
Yeah, well, let's see if the earnings pickup does become so swift that we do that. If I'm to be believed, our growth numbers for 2018 and 2019 look
But
robust.
our rupee GDP would be much higher because rupee has depreciated compared to what it was 10 years back.
True. Well, let's take a break on that note. We've been incessantly on the markets, but need to be there. 11,023 for the Nifty, Sensex at 36,000. Come back and talk about the micro as well. We've been talking about good numbers. Commodities have been on a roll. A mid-cap company, Godwari Power Ispat, the Q3 performance was very strong. The stock has been on a roll. We touch base with the managing director, Mr. B.L. Agrawal, on the other side.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises
to keeping them.
From manufacturing slogans
to really making it India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint. Well, commodities have been on the ball. Welcome back to Indian Open right here on Bloomberg Quint. The markets are galloping ahead. 36,015 for the Sensex, 11,033 for the Nifty, and commodity stocks are ruling the roost today. Hindalco, Vedanta, Tata Steel are amongst the top gainers. The Nifty metal is up 3.5%. Good time really to talk about a stellar December quarter for yet another company in this pocket, which is Godwari Power Ispat. Strong revenue growth, EBITDA numbers much higher as well. Let's talk about all of that and more with the management of the company to talk about the quarter and of course the outlook ahead as well. Mr. B.L. Agrawal, he's the managing director, joins us right now on the show. Thanks so much, Mr. Agrawal, for joining in today. It was a robust quarter. Is this a sign of things to come? You believe this revenue growth numbers that you've shown, arguably also because maybe of lower bases, could continue into 2018?
Yeah, I'm sure next 3-4 quarters are going to be quite robust. And fortunately, we have the backward integration of our iron ore mines. And the prices of iron ore are going up. But because of captive mines, our prices are not impacting. That's the reason the company is doing, among all other players, is one of the, I think, better positioned. And pellet is our main business. Domestically also, and the export also is very robust, very, very robust. With the mining activities cutting down by almost 20 million ton in the state of Odisha because of Supreme Court order, there is a shortage of iron ore mine. And that's the reason the price of iron is also going up. And accordingly, the price of steel also, the price of pellet also. And I think this show will go on for quite some time. I believe that the metal cycle, which was earlier passing through the very, very bad phase, almost 3 to 4 years, I think will now pass through a good phase for again 3 to 4 years.
3 to 4 years. We've had a bit of a rally over the last 18 months, Mr. Agrawal, in the metal space as well. You were saying that your estimates or your assumption is, or your thoughts are that this will last for another 18 months at least, if not more?
Minimum.
Minimum 18 months.
Minimum.
Okay. And now, what does this do to demand and final product prices? We'll come to the cost-effective measures in a bit. Firstly, about your product prices and the demand that is thereof. How does that look like for calendar year 18? And what would be capacity utilization levels that you would be at? Would you need, or are you looking to even expand capacities looking at this great cycle?
No, in fact, we do not want to expand our capacities, but we will integrate our capacities.
Okay.
Currently, we are producing about 4.5 lakh tons of sponge iron, but still we are able to produce only 2.5 lakh tons. And because we have some shortage of power, so we are eyeing on one asset which can be converted into our captive, then we will be able to a complete player from right from iron ore mining till our final product, which is wire rod. The other product is pellet. We have 2 iron ore mines. Total combined capacity is 2.1 million ton. The pellet capacity is again 2.1 million ton at Chhattisgarh and 0.6 million ton at Odisha. Almost 70% is captive. We have to buy only 30% from the open market. Now, because of shortage of the iron ore, the prices are going up. Accordingly, the pellet prices are also going up. Steel prices are also going up. And there is no sign of improvement in the mining capacities in the country. I've just seen the last week number of the import of the iron ore. Earlier, which was paced to hardly 0.5 million ton a month. Now, January month, it is expected that the import will cross about 1 million ton. It's very obvious sign because of iron ore, which is our backbone. Our earnings, our growth will continue to do the similar position in the next quarter also, which we have already achieved from Q2 to Q3. I'm sure that we will achieve the same numbers again from Q3 to Q4.
Now, by same numbers, okay, let me just refresh it for our viewers. Your revenues grew up to about 675 odd crores in quarter 2. What's the annual guidance that you, quarter 3, excuse me, what's the annual guidance that you believe could be there on your revenue front?
For FY19?
FY18, sir.
For FY18?
Yes.
Total revenue will be approximately 2,200. And I hope with the current run rate, I hope the EBITDA will be again plus 600.
Plus 600. Okay. Are you factoring in a jump in your EBITDA margins from where they are currently? Because your EBITDA performance was very strong, and you spoke extensively right now about how because of what's happening in the state of Orissa and because you are integrated but others are not, your costs are much lower. With the uptick in revenues, would your operating margins improve further?
If we, because the realization in the Q3 was much lower as compared to the realization which we are fetching in Q4. Assuming our cost of production remains to be the same, even though the margins are on improving trend. So I think the EBITDA growth for the Q4 will be better than the EBITDA growth in Q3.
And EBITDA margins too will be better than Q3.
Yes.
So you've done 25%, they could be better than Q3.
Yes.
Okay. I have two last questions, sir, very quickly. Firstly, on debt. Now, your half-year debt, as Nikki, my analyst, tells me, was about 2,600 crores, if I'm not wrong.
No, my consolidated debt is 1950.
1950. Okay. Is there, as of end of Q3, okay, are there plans to bring it down further?
Definitely.
Okay.
By March, we'll bring it down by 100 crores. But in the next 2 years, we are sure that we'll bring it down by additional 600 crores minimum.
Minimum 600 crores over the next 2 years. Okay. Yeah. And would you use this upcycle? It's prudent probably to do that, but would you use this upcycle, and the markets are rewarding your stock performance as well, to maybe raise some money for further expansion or to level out your debt equity ratios? Any plans of a QIP or any kind of additional equity fundraising?
In fact, we have in the last board meeting itself, we have taken a resolution to raise about 500 crores.
Via equities?
Via various means. FCCB, maybe the QIP and other means. Definitely, this is valid for 1 year. We'll go to the market at the appropriate time. And once we get these funds, so surely we'll use this fund mainly for the debt repayment.
So when will you do this fundraising by?
We have 1 year cushion.
But are you looking in the second half or the first half?
No, maybe in the first half itself.
First quarter or?
Yes.
For this current quarter, you're saying?
No, not in the current quarter, but
first quarter of
FY19.
Okay, fair. You're comfortable with the current valuations?
Yes.
For the QIP?
Yes, we are comfortable.
Okay, great. Good having you, Mr.
One thing I would like to add.
Yes, please.
Currently, promoters holding is about 67%. In no case, we will dilute beyond 55%.
Okay, fair call. Appreciate that candidness, and thank you so much for taking the time out and joining us today, Mr. Agrawal. Good having you.
Thank you. Thank you very much.
That's Godawari Power Ispat. The stock has been on a roll, quite frankly, and good results as well. Well, decent numbers from Havells probably as well. 27% jump in December quarter. Profits, the management, Mr. Anil Gupta joins in to talk about the numbers and to take forward this conversation. Agam Bakli is standing by.
Thanks for that, Neeraj, and Mr. Anil Gupta, the Managing Director of Havells with us. Thanks for joining us too. Good morning to you. I want to start off with your cables business because we're looking at well over 30% of your revenues coming in from there. So, your margins have expanded, but we're also looking at a decline on a year-on-year basis with respect to the growth in the segment. Is this weakness in this particular segment likely to continue as we move into the next couple of quarters as well?
I think the last few quarters we've seen a muted growth in cables, especially because of the fact that post GST implementation there was delay in release of orders by contractors, by government departments, because the cables rate came out at a much higher level than the pre-GST rates. Post 15th of November, we've seen the rates being rationalized now back to 18%, which was the pre-GST rates. So we believe that growth will now start coming back into the cables and wires segment also, which has seen muted growth because of these particular reasons.
So when it comes to the electricals consumer division, which has shown the most robust growth among all your segments, what is it that's driven growth in this particular area? And can this remain the lead growth driver as we move into the next couple of quarters as well?
A lot of product launches in various categories of consumer durables, within fans, within water heaters, within appliances as well. So which is leading to good growth. Also it is, this quarter was the demonetization quarter last year. So there is a little bit of a base effect as well. However, we are quite confident that we'll be getting decent growth in the consumer durables in the coming quarters.
All right, sir. From what we read, the research firm Channel Checks suggests that non-bill transactions have reduced, and GST has further hastened that process. How does this shift in focus come between wholesales and distribution?
Well, I think each kind of segment has its own place. Wholesale has its own place. Distribution has its own place. Havells is traditionally a company which has been, multi-channel. So we have retailers, we have wholesale, we have distribution, and I believe that this will continue to remain so in the future. Without bill transactions reducing has actually created a level playing field for not only manufacturers but within traders. So there will be a little bit of a shift from one trader to the other, but overall the brand sales should not get impacted. So I believe that GST has been a great positive step. Not only for the industry, which is industrial organizations like us, but also from the consumer point of view, because a lot of inefficient taxes have been passed on, in a positive way to the consumer. So the consumer is paying less than before. Government is getting benefited because the compliance has increased. So the evasion of taxes is reduced. I believe that it's a win-win situation for all of us. So overall, it should impact in a very good way.
Right, so reports also suggest that the products of Havells have a relatively low to medium penetration, and this means that there is a lot of scope for expansion with respect to penetration. In that case, what are the product ranges that will drive growth for Havells, in the foreseeable future?
I believe most of our product categories will get benefited by this fact. So you are right that we have low penetration in all our product categories. So with economy rising, with the focus on infrastructure, with focus on construction demand, as well as rising levels of income, would definitely impact each and every product category of us positively. So we are hopeful that all categories will give us decent growth.
So curiously, when it comes to your Lloyds business, again, we were expecting a dilution in margins, but that has not come to be, and this is the second straight quarter in which that has not, passed off. So in that case, my question then is, can we expect Lloyds to sustain these margins and also perhaps to a certain extent also lift the consolidated margins for Havells India?
Well, overall, if you see that the margins may get impacted because of the lower margins of Lloyd, but lower margins of Lloyd are sustained, over last year, and going forward, this will definitely see an improvement in a longer period of time. So I would say that it will positively impact the overall margins of Havells in an absolute manner, absolute terms. But maybe as a percentage, it might not, but in absolute terms, definitely it will help Havells.
All right, Mr. Gupta, we'll leave it at that. Thanks for joining us and giving us an outlook and the perspective on this quarter's earnings gone by as well. With that, Neeraj, it's back to you in the studio.
Thanks, and we'll just wrap it up, Agam, and hand it over to you and Navneet on the other side of this break. But keep in mind that the markets are very, very strong, 11,042, 36,043. So we were talking about whether the markets will nudge 11,000 or no. We are comfortably above that level, and the global markets are supportive, mind you. So let's not be skeptical about this move. It's a broad-based move. Commodities, by and large, are just ruling the roost, but a clutch of other names are doing well too, the likes of aviation, for example. Watch out for JSPL, by the way. Amongst all the other commodity names, JSPL is the leader right now, 8.5 or 9% trading at the highest point of the day. So watch out for this whole commodity basket that seems to be in the thick of things. But take a break, or in fact wrap it up on this leg of Indian Open. Up next is the FNO Show.